Hi, this is Lee from the Law School Toolbox. Today we have Nikhil Agarwal from Juno here to talk about student loans and how to get yourself the best loan rate you can. We would like to take a moment to thank Juno for sponsoring this podcast episode. Want to learn more about how you can lower your student loan rates? Check out joinjuno.com for more information. Today, we have Nikhil Agarwal from Juno, who's here to talk to us about what they are doing to help support students in many different parts of their educational journey, but including law school. So thank you so much for taking the time to join me today.
Thank you so much for having me. We are super excited to be here.
Awesome.
Yeah.
Well, who doesn't love to talk about law school loans? So,
I was chuckling when you said that.
I
I was
mean,
like, this is everyone's favorite topic. They've been waiting.
I know. I always bring in the fun. It's like we talk about budgeting, we talk about law school loans, we talk about stress. It's always a good time here on the Law School Toolbox.
In a good environment, absolutely. In a safe
Nice.
environment too. Yeah.
Exactly. All right. So to get things kicked off, can you share a bit about yourself, about Juno, and kind of what you're doing with loans?
Absolutely. So I started out as an aerospace engineer. That was my
Oh,
undergrad. I went to Boeing. I was designing airplanes. That was me, right? Then I decided to go to business school. A little bit of a push from my wife. And in that process, I was like, oh my gosh, like, we needed like $110,000 a year or something, just absolutely insane amount of loans. And then I saw interest rates and I was like, this doesn't make sense. Um, and we got this little message from like the admitted students chat, everyone gets together just before they get to school. And in that
mhm.
chat, there was a student from Israel, and they mentioned like, hey, in Israel, this is something we do. We all get together, like 20, 30 students. We go to a bank and we say, we'll all take a loan from you, but the interest rates needs to be X, lower than what the bank normally does. And I'm like, I've never heard of this concept of negotiating
No,
with the bank on interest rates. Like, what?
no. Because
Um,
it sounded like healthcare to me when I first, this idea that you like kind of all come
group
together to try and get something better, but I hadn't heard it outside of the healthcare.
Yeah, exactly. Yeah, in insurance, group insurance is a concept, right? But group student loans or any loan, just never heard of it.
Yeah.
But we honestly, it was just super casual. We were just like, hey, we created a Facebook group, we created a little Google form where people could put their information, right? And we just shared it with the group. We ended up getting like 70-ish people from my incoming class um, say that, hey, I want to, sign up for this thing, whatever this thing is. And we started reaching out to banks, and we were like, hey, can you give us a lower interest rate? Now in the US, it's a little bit different. Branch managers have no power in changing interest rates, right? That concept doesn't exist. So Chris, my co-founder, he's not here today, but he had the idea, like, let's reach out to like CEOs and see if they have the ability. Like a CEO should be able to change the interest rate, right? You think. Um,
You think?
and one of them responded, one of the bank CEOs responded, and they said like, hey, 70 is cute. If you get to 500, let's talk. Not in those exact
Mhm.
words, but that was the vibe of the message. Like, so they gave us a target. They said 500. Well, now we have a target. I shared this with the group. The group rallied. We went from 70 people to 700 people in a matter of 10 days. That's it. 10
That's
days.
amazing.
I've saved those screenshots of the post because I share it with every employee that onboards at Juno has seen these screenshots. So the group rallied. We got 700 people. Weirdly, that CEO that instigated all this, he didn't even reply to my message. So let's forget about him. But a different bank, we did a deal with them, $25 million of loans that first year off of Facebook group, right? So you could tell there was so much power in this concept. The rates were amazing. People saved like $14,000 each compared to the federal loan alternative that was sort of the default most people were thinking about at the time. And we were like, oh, we stumbled on something. Don't know what exactly yet, but like something. And we just committed ourselves to repeating this every year. We've done that for the last 7 years. We've grown it to over $1 billion of student loans originated in this format. We've become the largest, player in the space per se for graduate student loans, and let's see where the future takes us. But that's where we are.
I think that's so cool that it happened a little organically. It came out of the idea that there might be a better way being done somewhere else and then trying to implement that into the US banking system. Well, before we get too much into the specifics of how something like this can save students money, I think a lot of folks and people who listen to this podcast, some of whom have not started law school yet, don't really understand that there are some options or choices around student loans. I think grad school is expensive, right? You went to business school, also expensive for my friends who went to business school. And we're talking about really big numbers. So, what are the different types of loans and why are these interest rates so important? Like, does it matter if it's a 4% versus a 3%? Because it sounds like, lawyers don't really like math, generally speaking. It sounds like that's not a big number, but I think over time it might be.
Absolutely. The difference can be absolutely staggering. Yeah, the interest rates are a bit, maybe they underplay the actual difference in dollars, right? Like if I
Mhm.
spend $14,000, that's a meaningful amount versus the actual difference in interest rate on those loans may only have been like a percent and a half. The other gotcha is origination fees, right? And it's very interesting. It's the only situation, not only, but it's a situation where we see federal loans, right? Which generally we think of like, oh, these are super friendly, right? Federal federal loans seem to be the only ones that still have origination fees, where the private
Mm.
market has largely moved away from origination fees and they only charge interest, right? So whatever is outstanding on your loan, you pay, a percentage of that in interest each month, as opposed to origination fees where it's like a one-time fee that you sort of get hit with when you first borrow. But I think generally we've come up with this little bit of a decision tree, right? So the two main choices we see are federal loans and private loans. And when we think about that split, we think about what are the features that are unique to federal loans. And if you need those features, then you should go with federal loans, almost not thinking too hard about the cost, right? It doesn't matter if your private loan is cheaper if it doesn't have the features that you need. And when I talk about these features, I'm really talking about what happens during repayment of these loans. The federal loans offer public service loan forgiveness. So, for example, if a lawyer is going to do a couple of clerkships and then they're going to go into like big law or something like that, they probably are not going to qualify for public service loan forgiveness. But if they're dedicating their career to public service, right, and they're going to follow that career path, they're going to be an employee either of a nonprofit or directly of the government, those roles are perhaps a great fit for public service loan forgiveness. So that those are the kind of features that students really need to think about when deciding like, am I even in a place where I can optimize for cost, or am I just like my only option is the federal loans? And after that, it's a question of cost, right? And I think, unfortunately, fortunately, I think it's still up for debate what the impact of the latest legislative changes are. But starting in 2026, there's going to be less options in terms of federal loans being available. So some lawyers may be pushed into choosing a private loan primarily because they've hit the caps on how much they can borrow either annually or lifetime from the federal loan program. So that's a new change that's going to hit us in 2026. It really impacts people who are incoming lawyers in 2026 as opposed to like um, folks who might be already enrolled in law school. But yeah, that's definitely top of mind for us. We are thinking hard about how to create a solution that's very friendly for you know, those people.
Yeah, I will just say, embarrassingly enough, I did not spend enough time kind of really understanding what all of my options were. And when the financial aid office just like hands you things, and they're like, okay, like here's what we can offer you, and this is what this looks like, and these are your interest rates, and then you're like, okay, I mean, most of us then don't say like, what does that really mean? And I would say that I did not at that time fully appreciate what that meant. And it wasn't really, this is kind of embarrassing, but I'm going to admit it on the podcast in case it like helps other people, that I got married not long after law school. And every couple I would recommend has to sit down with their finances and really have this like, hello, this is my universe of finances. It's very important whether you have a prenup or not. I think everybody needs to have that conversation. And if you can't, probably shouldn't get married because that's like a huge part. After being married, I just had my 15-year wedding anniversary. It's like a huge part of your relationship. So, and my husband has a finance background. And so I'm showing him these loans and he's like, whoa, what is this private loan? He's like, this interest rate is nuts. And I was like, no, 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 it's a school loan. You get good interest rates for school loans. And he's like, no. He's like, you have one that's a really good rate, but the other one, that's not, that's a very expensive money. Do you understand how expensive that money is? And I was like, but that's what they offered me so I could finish law school. I mean, I think there has been this kind of lack of empowerment of students that you just have to take what is offered. And some of these deals over the years have been bad. I
Yeah.
mean, it was a terrible interest rate. And, he's like, together we're going to figure out how to not hold that interest rate forever because it's a terrible financial choice. But I'm kind of embarrassed. I consider myself a fairly savvy person. I'm not bad with money, but those were questions I didn't even know that I needed to be asking because I just signed the papers that were given to me.
Absolutely. And we see this every single day. There's the path of least friction, least resistance, right?
Yeah,
Financial aid office sends you a solution to your
right.
immediate problem, and you're like, check, check, and it's like it's done. Like it's a afterthought until after when you get your first paycheck, and you start thinking about what percentage of my income is going towards my student loans. That's sort of the first time a lot of people are like even thinking about how much this is costing me. And but
Yeah,
then you've already had 3 years of interest accruing, right?
yeah,
What we've been fortunate is we've been able to speak to tons and tons. I don't think I'm exaggerating if I say we have over like 2-3 thousand phone calls each summer with students and their families sometimes, or spouse, or yeah, call everyone. Um,
you'll talk to anybody about it.
we'll talk to anybody, right? Educating them on their options, right? And we really make it super transparent. And what we encourage them to do is we call it a rate check, right? So we do a rate check on our website. It's a soft credit check, so it doesn't hurt your credit history in any way. But based on that rate check, we are able to understand what are your private options. We know your federal options right from the get-go, and we can sort of evaluate everything holistically. And in that discussion, usually within 10 minutes, we know exactly which option is going to be the best for that family. But we make sure they understand all of their options so that they can be like, okay, yeah, this is why this option makes sense. And we
Hmm.
talk to such a wide range of families. There's some families where they really, really want to optimize for, hey, we're going to pay this loan off really, really fast. We don't mind being extremely frugal in that process. I can't sleep at night if I have debt, right?
Right.
There's other families where like I need to balance life and I have these other responsibilities. I want to make sure the monthly payment is a lot more manageable. It's fine if it costs more in the long run, right? So we have to take into sort of these non-math um, things, right? Combine them with the
Yeah.
math. The math is easy, right? We all know how to, not we all, but like we can do the calculation of how much a loan is going to cost. That's easy. But the non-math part is also something that has to be given consideration before a family can decide, okay, this is the one that's best for me, right? And I think that's where the Juno team just shines in giving that support.
Yeah, because I know you work with undergraduates and graduates, right? And graduate schools. And I do think that that is a little bit different, maybe about the graduate school decision, because most of us go back to graduate school when we're a bit older. Maybe we've worked for a few years. Of course, you have people that go straight through, but I know I took, I think, 5 years off. And so when you start to look at these timelines, you're looking through them like to maybe till you're like 40 or so, and a lot happens between the time you may be 25 or 26. Let's just say, I think the average law student's like 27. and 40.
Yeah.
And like a lot of life changes. You might be trying to buy your first house. You may have children. You may start a business. And this debt um, becomes a very important part of those decisions. And I do think that that is also something that I didn't really think about as much when I was going to into law school. I knew like to just borrow as little as I could because I didn't want to accrue, too much debt. That was my, I said, I'll just do what I can. But, and I got some scholarships and things like that. But I do think that there's an idea that like it feels different doing this graduate school borrowing at a different time of your life when these monthly payments are going to maybe impact some major life choices
Yeah.
as you go down the road.
The biggest one, or the most common one, I would say, is purchasing a house. And
Yeah.
usually we don't have this conversation with anyone while they're taking their private student loan, right? Like when they're in law school, they're not coming to us and saying, hey, when I buy a house, how is this going to happen? They're just not in that mind space yet.
No.
Right? But I do have that conversation with folks for 3, 4, 5 years out, right? Because we help with refinancing of student loans where we can help bring down, if you have an existing loan, we can bring down the rate on that potentially, right?
So I could have called you after that conversation with my husband,
You
and you
could have
could have
called
helped
me,
me with my terrible interest rate.
absolutely. That's a situation we fix every day for many, many people.
Great.
Um, but yeah, that's when that topic comes up. And if we have that conversation a little bit upfront, this is going to sound so controversial, but I'm going to say it. There are many families that I believe go extremely frugal by sort of utilizing all of their assets, right?
Mhm.
Every stock they have, every cash savings they have, their emergency fund, they throw everything at school to borrow as little as possible, and they effectively restart their asset base at
Mhm.
graduation. That pushes out the prospect of buying a house significantly, sometimes 2, 3 years. And annual appreciation on a house in the US is 4%. A lot of folks
Mhm.
who are going to law school, they're buying houses worth 800K, $1 million. 4% on $1 million is 40 grand, right?
Right.
That's just in the purchase price, not including the mortgage on top of it, which can sometimes triple the purchase price. So
Right.
there's a it's like, do you optimize for like the local optimum, right? Or do you optimize for
Mhm.
the life, your overall life? And it's kind of weird, but those things can be in two different directions. Um,
Yeah.
and it's not easy to make that decision. It's so hard to say like, hey, why don't I let these stocks sit here, right, while I'm borrowing more? Um, that's sometimes a hard decision to make. But what we do is like we help people see the math on that, right? Because I think a lot of people overestimate how much they are losing
Yeah.
when they make that decision. And in some cases, some people get a low enough interest rate where it's actually to the benefit of their long-term net worth to do that, regardless of whether they buy a house in the future or not. So,
Right.
there's so many scenarios here. It's not like there's a clear-cut answer, but my goal is to make sure everyone has the information so that they
Yeah.
make a conscious decision of like, hey, this is what I want to optimize for, and therefore this is the best decision for me, as opposed to making a decision without the information. Then you're kind of relying on luck.
Well, I think you really hit on an important point there because this is, money is so tricky for so many people to talk about. Many people don't like to talk about it, whether you have it, you don't have it, you're confident in it, you're not confident in it. But I think it's a loaded subject for almost anyone. And as I've been working with law students for a long time, as I've, kind of grown up myself and watched, friends and colleagues make all sorts of a variety of choices, I do think that no matter what you do, talking about it is incredibly important. So we've have some interesting interviews with the founder of You Need a Budget on this podcast, and he is, I think, really such a great advocate for, you know, looking at what you're doing. Just do, make your decisions and then like be good with it, but make sure that they're choices. Just like be transparent and make choices and educate yourself. And I think that starting school is, as much as it may not feel like a great time to do that, it is a great time to do that because maybe you're incurring debt, but then you really need to understand where that money is going,
Yep.
how you're making lifestyle choices, and then coming out of school. And if depending on if you're doing big law or you're doing a clerkship, you also really need to be aware of where that money's going and how that might influence your loans. And it's just something that needs to be discussed, and you need to find people who know what they're talking about if you don't know that much about it, so they can educate you. And I think that there's a lot more advocacy around that now than there was when I was starting law school, but I still know plenty of people who do not want to discuss money. And
Yeah.
unfortunately, money is important. It's not everything, but it is how we move throughout the world. And you have to understand it before you sign on the dotted line.
Absolutely. The wrong choice on a number of matters, but a student loan can be career limiting, right? You may feel
Yeah.
constrained, in a certain path you want to follow because of the loan you took, and perhaps not every situation is solvable, right? But a lot of situations are solvable if you make the right choices at the onset, and,
Yeah.
and everyone deserves that information so that they make the smart choice.
Yeah. So hopefully we've convinced everyone that
Yeah,
they need to
educate
like
yourself.
be educated in your choices. If you are seeing numbers that are scary to you, you can call the Juno team and they're going to talk to you about it in a nice soft way that's not going to be very intimidating. They're going to hold your hand through it. But let's talk about what happens if you have one of these loans or you're new to law school and you want to engage with Juno to negotiate this better private loan rate. So like what happens?
Yeah, we try to make it super easy, right? It's kind of weird, but it's very similar to what happened back in like 2018 when I first started this Facebook group. It's just a little more professional, right? So instead of a Google form, now you're using a very secure portal where you're filling in your information, right? I'll call it a data hungry mailing list is what you're signing up for, right? So you come to this website, you put in your information, right? And what you're giving it is like personal information, who you are, name, address, stuff like that. You're giving it educational information like, hey, where are you going to go to law school? Where do you hope to go to law school, right? And you're giving it like financial information, right? Do you have an income right now? What your credit score might be approximately, stuff like that. And all of this is typically happening at Juno between like October through, call it March, aligned with roughly the admission cycle. So as people are getting admitted, they get to know about Juno and they join us, right? Now, during that time, in parallel, what Juno is doing is we're creating, for lack of a better term, a large Excel file, right? We're anonymizing all the information. Yeah. We are basically no PII is in there, right? It's just fully anonymous.
Right.
And we're sharing that information with lenders that are interested. And we're saying, hey, this is the class coming in who's going to need a loan in the fall, typically, right? So fall 2026, for example, we'll start putting that class together in October 2025. And we're going to all these lenders and we're saying, hey, can you offer us something that, one, is cheaper than the federal loans, because all these people can get federal loans, has to be cheaper, otherwise there's no point, right? Two, cheaper than any other private loan that they can find, right? So you have to beat the market, right? And we have some like additional features sometimes we'd like to add to our loan. So one of the most popular ones is a rate match guarantee, which means if that borrower is able to find a better rate anywhere else, you lender are going to give them that same rate, right? And on top of that, we cut the borrower a check for 1% of the loan amount. So basically, it's impossible to get a better rate outside of June, right? From the private market perspective. Um, and so we go to these lenders, we ask for these kind of things, right? And now they're going to give us what they give us, right? Some lenders are going to say pound sand. Some lenders are going to say, well, this is pretty interesting. I did, $100 million of business last year, right? We gave $100 million of loans this year. You're coming to us saying you can make it 200 million, right? We are happy to reduce our margins to earn your business, right? Um, and then and then we evaluate each of the options. We have two metrics we use to evaluate it. First is the size of the group that is better off with if this deal was to happen, right? And number two, how much better off. And I put that as number one and number two because we really care about it in that order, right? Not that those are completely independent metrics. It's, for example, if someone was saying like, we'll save everyone $1, yeah, that's not really impactful, right? So, but generally we prioritize a little bit more the number of people that are better off with the deal than the absolute size of the discount. Um, and yeah, that's it. After we do that, roughly in May, we make that available on the website and open it up. Anyone can come, including people who were not participating in that group earlier, right? So freeloaders per se, but they didn't, they didn't contribute in the size of the group in negotiating the deal, but they are contributing towards next year's deal because the other thing that matters is our track record, right? If we go to a lender and we say, hey, we think you're going to get $100 million of loans if you agree to these rates, and then they only get 50, well, next year they're not going to be too happy with us, right? And interestingly enough, we see it roughly double between the size of the group before the deal is launched and the size of the group after the deal is launched is roughly doubles is what we see. So yeah, everyone comes, they apply for the loan, they see the rate, most people like it, they take it. Amongst the grad population, we see only 4% utilization of our rate match program, right? So we suspect a very, very low percentage of people actually get better rates than what we are able to negotiate. And for those that do find a better rate, we have the rate match program. So they're still better off. Um, yeah, I feel like I went into a spiel over there, but
No, I think that's great because I think it really kind of explains what happens. And then the other thing I was thinking about is like, why would the banks negotiate with you to lower these rates? But it's because it could be $50 million of loans. I'm just like choosing random numbers,
yeah,
but that they're still making what, I don't know, 4% off of 50 million, which isn't so bad. So, I mean, like that's their motivation to negotiate with you, right?
absolutely. Yeah, their motivation is largely, they want profitable loans on their books. They see a group of people who need these loans, and it's basically a matter of making it more affordable. So I think they think of it in terms of margin, right? Like, okay, we could make this much quote unquote profit, right? But if you make a little bit less profit per loan, we are able to give so many more loans, right? And I think that's the other thing is, and we don't know this for sure, right? But um, we suspect there's, call it a marketing angle to these things, where um, the by getting this much exposure in their first year, right? They hope that organically will grow their business in future years, right? Which, whether it happens or it doesn't happen, I have no idea. We'd have to go ask a lender and they won't tell us, right? But I suspect there's some of that playing in their minds. It's like, oh, if I give a loan to 80% of the HLS incoming class, surely the next class is going to, at least some portion of that class is going to know about us, right? We
Right.
include it in the consideration set. It doesn't matter because Juno's going to beat the deal next year anyways. But um,
You're like, beat the deal or we're going shopping for somebody else.
yeah,
So sorry. No loyalty here.
not too much, no.
We're
We're loyal to
business
our
majors.
members.
Yeah, we're not lawyers, we're business majors. We're you can't just like talk about numbers and like scare us off. We're here for it.
Yeah.
Even though there are plenty of lawyers that are good with numbers. It's just generally speaking, lawyers don't like numbers.
Yeah.
Yeah. Well, I think it's really interesting. And I think it's very empowering given that students one have access to more information, but that you're creating a competitive marketplace because I do feel like my memories of this, like I said, was that it was pretty powerless. Somebody gave you something from financial aid and you signed it and you're like, well, I'll deal with this later when it comes back to pay it off. And I think most of my friends who went to vet school or medical school, it was the same. I mean, I think that and But then we all had conversations, after we were working our professional lives, being like, do you know what your monthly payments are? Like mine. And now I'm applying to, for a housing loan, or I had to have an uncomfortable conversation with my partner about how much debt I have and like what it really means. I mean, it is real life stuff. And it just behooves everyone to understand their options. And if you can save money, it's a big deal. I mean, we kind of touched on it, but before we finish out, I'd love to give people an idea of like what a rate change can mean to them over time. So now because you went to business school, so you have to do math on my podcast. Haha, sorry.
I need
But
the numbers down pat.
oh, good. Okay. But I think just so people know what these numbers mean, because I think they do still feel very abstract.
Absolutely. So what we see in our data is the median graduate student is borrowing roughly $65,000 a year. So on that, and that's per year, right? So for a law school student, it might mean $180,000 over their career, 195.
Yeah, which is a lot of money, folks. Like that's a lot of money.
That's a lot.
It's a lot of money. Okay.
And the interest rate reduction we are seeing, we generally start with the federal loans and compare our median rates to that to try to evaluate like, okay, how much are we able to save people, right? Some people are saving a lot more, some people are saving less, but in that range. And we see generally a 2% difference. And that 2% difference plus the origination fee difference usually translate into like $14,000 per year of savings. So over the course,
It's $14,000 per year of the loan. So like over the 3 years, or $14,000 like every year you're paying off the loan.
oh, I wish it was the latter. No, sorry,
Okay, I was like,
$14,000
that
on
would be
each
like,
loan.
I was like, what? Okay, no, just
Oh,
making sure. So
yeah.
$14,000 off the year of lending, or like year that you've taken the money out, kind of.
Yeah. So on your $65,000 loan,
Yeah,
the median person is saving like $40,000 over the entire life of the loan. And so that will
right.
happen.
Which is still a lot of money. I mean, it's not every year, but it's still a lot of money.
Yeah, I wish it was every year. At that point, the bank would be paying you. But
I know. But that could be around $1,000 a year for most people for just that.
yeah,
I mean, that's
yeah, more than $1,000 a year, and into 3, right? So you end up taking
right.
4 or 5 grand a year. Yeah, and for a lot of people, that's I would think of it as like a student loan at the end of the day is a commodity. Money is like the ultimate commodity, right?
Yeah.
The terms, like call it the fine print on these loans are no different than the loans you get, from any other private lender, right? I mean,
Right.
I should clarify that. Yes, every lender has the little spin on things, right?
Right.
But for the vast majority, it's a very vanilla product. There's not a lot of permutations and combinations of features that these lenders have. So for an extremely vanilla commodity product, if you're saving, $14,000 over the life of a loan, that's into 3, that's like $42,000 if I'm doing the math right. Nothing to sneeze.
And that's just money that you were going to pay the bank. I think that's the thing that's so powerful about this is like a change in the interest rate keeps money with you, but like the bank is the one who wins from these high interest rates. Like that's what they get. You don't get anything from paying them an extra $42,000. Like that's just money.
Your law degree is not nicer, or your academic achievement is not more by paying this money. Right.
No, the banks are winning. So by that change in interest rate, you're getting to keep the money, and and I think that that's really important. And like $42,000 is real money, and over time. And so when you think about those big life milestones we were talking about, when you start thinking about what real life milestones that covers, it's a big deal.
That's a down payment of a small house when you start a home.
Yep.
Right.
Yep.
Yeah.
Okay, well, I've learned a lot because it's clear that I did not know all of this when I started law school, and that's okay. I'm not going to judge myself about it. I didn't have as many resources as listeners have now. But if students don't want to act as I did back in my early days of taking law school loans, although I've paid all of mine off now, so I feel a lot better because I don't have them anymore. Thank you. I only kept the very low interest rate ones. I got rid of all the bad interest rates.
Yep. That's what it
All right. So students are interested in this. They want to learn more. They want to get started. So how do they learn more about Juno, what you do, and how can they engage with you or a team?
absolutely the best thing to do. I would suggest two paths. If you know you need a loan, right? You're already at that stage of education where you feel like I just want to get my most affordable loan. Go to joinjuno.com, register, and it will guide you through the rest of the process. If you say like, hey, I want to chat with someone, I want to have a conversation about this, I want to learn more, and then we'll figure out the steps that are appropriate for me. Go to joinjuno.com. There'll be a contact button. You can literally set a Zoom call one-on-one with me, and just like you and me are talking, any of your listeners are happy to book a Zoom call with me. We'll hop on, we'll chat about their situation, and go from there.
I think that's amazing. I really encourage listeners, no matter what, to book that call to just learn more about your situation. You can choose, what you feel like is the best thing for you, but knowledge is really powerful. And these choices have lasting ramifications. And so everyone needs to be empowered with information. So although nobody likes to talk about money, it's super duper important to talk about money.
I will,
So
I will, I will take a moment to boast a little bit. 70% of our members hear about us from word of mouth.
that's great.
That's by far the largest way people hear about us, and we are really proud of that because that means if we just gave a student loan, no one's going to go talk about you, right? Especially a money topic, right? I got my student loan from, no one says that.
No.
With I think what we do really well is have that transparent communication and make people feel confident in the choice that they're making, right? And we
Yep.
support you regardless of whether you use a Juno product or not. We are here for that conversation regardless. So yeah, please feel free to reach out and we.
Well, awesome. I encourage listeners to do so. We will, of course, include links to the website where you can find that contact button on the notes for the podcast. And I really appreciate your time today. I hope that we have not made people anxious. We've made them more calm about money conversations. So
I hope so. That was the goal.
amazing. Well, thanks so much for your time. And, you know, enjoy talking about student loans. I guess that's what you get to do all day.
I do actually, and thank you for the opportunity. I think this is fabulous. We would love to be more engaged in the law school community more than we have in the past, and
Yeah.
thank you for helping us become a little bit more aware in that community.
Well, absolutely. We all need to be talking about the realities of these choices. So I'm glad to have you on. And for listeners who have not heard our episodes with You Need a Budget Founder, I'm going to link to those as well because I think they're important to just engage with yourself about talking about these hard topics. So thanks so much for your time today. And we hope to have you back on the podcast soon.
Right.
We would like to take a moment to thank Juno for sponsoring this podcast episode. Want to learn more about how you can lower your student loan rates? Check out joinjuno.com for more information. If you enjoyed this video, please take a second to give us a like and leave a comment, and be sure to subscribe to our channel so you don't miss any future content. If you have any questions, feel free to reach out to us via the contact form at lawschooltoolbox.com.